can you just talk about your role and as well as what the industry trends are?
I currently operate as the managing partner of Fergmar Capital. We've been in business about 2 decades, started off in the single family fix and flip investment side. That's transitioned into, we have a development ground up division on single family. And then we're also in the multifamily space, went from single family rentals, duplex, fourplex, kind of follow the ladder up until you're in 100+ unit complexes, which is what we target today. And then we're also in the space of kind of neighborhood style retail centers or professional retail centers. And those are the two main asset classes that we're buying today. We sit at about 1,000, little over 1,000 units now, about 500,000 square feet of retail. And then we have a few other, like we have a mobile home park self-storage, but those are things that have been in our portfolio. We're not acquiring anymore at this time. But so that's who we are and where we sit today.
Got it, got it. So your two main assets are multifamily and single family, or
Well, I mean, the main assets for long-term holding are multifamily and then retail shopping centers, or I like to call them neighborhood size professional retail centers is what we go after.
Got it, got it. Cool. That's awesome, man. So it's amazing that you're able to handle so many things. And so talk about what industry trends you're seeing and pick any sector you like or maybe all of them. And
Sure.
like what are the trends that you're seeing right now and how is it impacting your business?
So I mean, the past few years, obviously things were a little rough. We'll touch single family first. I mean, transactions, one thing slowed down. So we had when you're moving, 100, 200 transactions a year, it's like inventory of anything, like having a retail store. You get stuck with inventory, you're sitting on it. You have to start cutting your losses or waiting it out, trying to figure out the best option. That has since same thing happened. New construction, just kind of the brakes hit on spec, and which is we had transitioned already after COVID, transitioned to mainly like I wouldn't call them custom specs, but they're like a highly modified spec house. We have a pretty high quality of what we build, but they were still more spec based. Because prior to that, we had 50 customs going at a time, so we had already transitioned to more spec building. And then after COVID, that was our transition, but then that completely stopped. So that was about a 2-year history. Around mid last year, between Q3, Q4, we started seeing a little bit more activity. Then it slowed down again. Holidays came. And then the beginning of the year, we've really seen activity pick up. We're starting multiple spec houses. Everything on the ground's pre-sold. We're seeing a lot of activity on the single family investment side. So that's kind of where that's at now. Through and through on everything on the shopping center stuff in the markets that we're in, and we're in more of a tertiary market, like where we're at in Victoria. We operate some centers in Katy, Texas. But even there and here, the Katy stuff is new, so it's hard to say we didn't have that through some of like the slower period of the years. But in Victoria, on the retail side, it's been pretty steady. I mean, we have not really seen a fall off, but we also are very particular on the centers that we purchase, and we look for a mixture between traffic count and over median average annual income. So there's a lot of things we target. So it becomes, and we're also in markets where there's not a lot of supply. So that's been helpful, but that has been pretty steady. And then on the multifamily side, we've actually seen a lot of our stuff. So we have some A class, but we have a lot of that B class product, and that high C to B class. What we've learned, if in a high C to B, again, we're in markets where there's lack of supply coming on. So we've seen pretty steady annual increases on our rent. We've been able to see a lot of growth there, which has helped because the past few years have definitely been a struggle. Everyone talks about taxes and insurance being higher, but there's been taxes and insurance and a lot of other things that have hit us. So, to overcome that, we have to do a few things. One, you have to really dial in on the operations and the management and save every $1, 1 penny, $5 you can, and just try to make up for the $50,000 and $100,000 hits. To protect that kind of that NOI line. But what's really helped offset that is we've been able to get above what we projected on rent increases just because the lack of supply. And we stand out a little bit in that B class or high C to B class property because a lot of people say, oh, that's a C+ class. I consider it a B because of the quality of the remodel and the upgrades we do. So we try to make sure that fine line between don't do so much that you're doing more than the product even needs, but do enough to where, will that $500 in backsplash just give you that little bit of competitive edge that gets you that better quality
Hmm.
tenant and gets you a few dollars a month. So
Got it. So pick any one or maybe one or two and sectors that you're working on because you're in these sectors, and talk about like what is your most urgent challenge that you're speaking. What is frustrating? What is something that you would love to solve?
you know, we have a great team. So a lot of the struggles we've worked really heavy on the past few years of solving those struggles. Um, what's worked really well for us is just kind of having that team, letting everybody be accountable for what they're accountable for. So while there are daily struggles, I wouldn't say there is a particular issue and all that. Honestly, because a big portion of our operation is just very well developed, where the struggle for us is in all the new acquisitions. We're not really having
Mhm.
an issue finding them. We've got a pretty good system there. But since we moved to that kind of outside capital syndication world, that's definitely something that we're solving daily, because we're finding the right opportunities, and these are opportunities that they're a great deal. We're overly equipped to manage them, to operate them,
Mhm.
and you're buying them right, at the right price. But you still need the capital injection to make it happen. And while we put capital in all of our deals, it still requires it's a lot of, if you're raising 5 million bucks for a deal and it's an average of 50,000 bucks, that's a lot of phone calls and meetings. So that's a big
Yes.
struggle for us. Our goal is we're really trying to transition not away from that, but we want to add in the aspect of more family office style
Hmm.
investors. So, if it's a $5 million capital stack, we're filling 3 or 4 million of it with some type of family office. We fill a piece of it, and then some retail investors. Right.
Hmm.
Right now it's us and retail investors. So that's kind of the biggest piece. And I guess I would say struggle slash we're developing it.
Got it. So talking about retail investors, how do you find these retail investors who can invest 50,000? That's usually the minimum. Um, and how are you building those relationships online and offline through events and whatnot? Like what are some of your strategies? What's working there and what's not working as well as you would like to?
So again, we're building it out. So it started out with just people we met. Maybe you met someone at the country club, you met someone here, and you put a few deals together with just people and then you get some referrals, and that fills the first few deals pretty quick, right? But then eventually, those people are waiting for that deal to start stabilizing. So um, now, and we were 506B in most of our first
Mhm.
deals, so it allowed everyone in. With this, we're under contract. Like we are a deal now that we just brought to market. It's 506C for the first time. So we're just now pushing into we're on the social media. We're putting it out there. I wouldn't say that's getting us a ton of traction. That's not necessarily the traction we're getting. I like to be more relationship based. So
Mhm.
personally, I'm spending a lot of time traveling. The past few weekends, I've been at a conference every weekend. I was at, give you an example. My schedule's been like as it's allowing it. So, and just really being intentional at these conferences and trying to meet people where we align with them, whether that's, capital partners or retail investors, and then, just asking for referrals and talking to everyone we meet. So that's if they align. We're really big on bringing in people that align with what we're trying to do, not just everyone.
So what are some of the criteria for your retail investors that you're trying to find?
Um, you know, not really a criteria about the investor as much as it is someone that with what they're looking for aligns with what we're doing. So, to give you an example, we don't go look for the what everyone was doing for years. And I don't think, I mean, there's still people trying to structure them this way. I don't think it's working as well, but let's buy it, do the bare minimal, get the rents as high as we can, and then turn it. We look
Mm.
for, um, we're more particular in the quality of what we buy. One, we definitely want something that has some type of value play where we want to be able to bring value to the deal. But that's not necessarily by changing the countertops and raising the rent $50. Can we bring value by better management, better
Mhm.
operational budget control on the retail side, better marketing? But we look for deals that we're going to spend the time stabilizing over, 12, 18, 24 months, whatever that may be. Like the deal we have now, right? We're going to stabilize for 18, 24 months. We're going to get it to year
Mhm.
4. It'll be really cruising at year 4. We're going to refi it, get a bunch of money back so we can pay investors back. And then we want to sit on it for the remainder of about a 10-year hold period. So, but we focus on things that may be longer holds, and we really focus on cash flowing that by the time we stabilize it, can we get to a really nice double-digit cash on cash return? So we just try to be intentional when we're talking to potential investors that is this what you're looking for? If you get people that say, I could care less about cash flow, I want the biggest home run deal I can find. There's a lot of options out there, alternative asset classes, and just different things you can really go put your money in if you want the higher risk and the huge reward. We're more risk adverse to higher cash flow.
Got it. Okay, so that you're looking for long-term and higher cash flow investors is
Yeah.
what you're talking
Yeah.
about. Okay, so I'm curious about something that I myself have encountered, which is in the multifamily space when you have, or even in single family, it's an investment. Uh, in terms of getting the tenants, you have this funnel of how many people are seeing your ad, for example, in apartments.com or whatever, how many of them, uh, you know, actually click on it, and how many of them set up an appointment, how many of them show up. So have you done something to automate that funnel and to have a real clear picture of where in the funnel you can improve? Like, for example, a lot of people are booking, but nobody's showing up for appointments. Or many people come for appointments, but only we convert only a smaller percentage than is the industry norm. So have you done something along those lines? I'm trying to see where technology can come up with a solution here. So any thoughts on that?
So, we do something very similar, like on the single family investment side, but focusing just on the multifamily team. So the property management team, the software we use definitely has like a CRM built into it. And so
Mhm.
we operate, we have what we call a scorecard. We operate on EOS. So, we operate on scorecards, KPIs, kind of a mixed piece of those. But we definitely track calls to leads to showings, deposits to lease signed, and then we look for the gap. We know what conversion ratios we want to see, and then when we lack that, for instance, we go, okay, well, phones aren't ringing, we need
Hmm.
more advertising. Okay, phones
Hmm.
are ringing, we're not getting appointments. That's probably then we need to really start, listening to the phone calls, figure out what's going there. If we're getting the appointments and we're
Hmm.
not getting the lease signed, what's going on? Do we need why aren't they signing? Condition of the property. We dig into that on the weekly meetings, or the property management team does. And then we'll start implementing, if we're not getting any traffic to it, that's specials, 499 move in, whatever that may be. We're getting people there and they're not signing, they keep shopping. All right, well, let's do a look and lease. We'll give you X special, but you have to look and lease right now, waive deposit,
Hmm.
whatever it is. So yeah, we track all those. I mean, the property management system does a decent job for it. I'm sure as technology keeps going through, there's probably a way to track that funnel even more in depth.
Okay, cool, awesome. So where do you see yourself in the next 6 to 12 months? And what is the metric that you're going to use for what are some of the metrics? I know that we talked about some of the metrics at the lowest level, but you are trying to set up a goal. You are the leader of the company, and you want to go from here to in the next 6 to 12 months. What are the top maybe three things that you're really focused on in terms of taking yourself from here to there?
So we're in acquisitions mode,
Okay.
and we've got that pretty dialed in. We're really focusing on perfecting our, like our onboarding process, our due diligence. We've really spent a lot of time the past few years perfecting that. Where a lot of our focus is we want to continue down acquisitions. We've narrowed down into just this buy box. We're being very strict on that, but
Hmm.
we really want to build that investor base, for our investment partners. We're growing that as much as we can. So we have whether it be family office, retail investors, whatever that may be, to fill that capital stack when we get the deal.
Hmm.
And then we're really working on which is a constant for us, is just perfecting that operational base of it, as we expand, ensuring that as we grow, we don't lose some of our basic foundational tools that got us to where we are now.
Got it. And have you looked at AI solutions? Like, are you familiar with the AI, like what's going on in the world of the AI? For example, I think if I was doing something in the asset management space right now, I would probably use something AI to solve the after hours problem, for example, right? Like, though that's just something that comes to my mind straight away. But have you have you considered any of the latest technologies, technological breakthroughs that are happening in terms of potential solution?
Yeah, I mean, so we're definitely probably not the biggest piece of it, but we have lots of, especially for like our systems, we're extremely, using it for like different integrations and building out. We have someone on our team that does a lot of the coding in the back end, and we're using a lot of AI to tie in some of our own pieces. Like we built our own back end system to just track all of our properties and expenses and a ton of notifications, even like on the acquisition side, like we have a ton of notifications and updates on what we're tracking, the percentage of what we're seeing, or new deal notifications, daily interest rate notifications. We're watching the market with that. So a lot of pieces like that. On the property management side specifically, I mean, our system has a lot of them built in, so we definitely utilize that because it speaks with
Hmm.
that property management system. And then,
Hmm.
like on underwriting and writing different things, we encourage our team, everyone has different versions, whether it be, ChatGPT, Claude, Gemini, we're utilizing all that, of course, a lot of the basic stuff, some
Hmm.
more in depth than others, like our lead intakes using it. So just different routes. So I would say, I mean, we're well versed. I wouldn't say we're at the top of the spectrum, but we're definitely not at the bottom of the spectrum as far as AI.
Got it. Okay. Cool. That's awesome, man. So, is there anything else that you want to talk about before we wrap up about your company? Is there anything that I interesting that I missed?
No, I mean, I think you covered it. That's just kind of like I said, what we're doing. We're in acquisitions mode. We're raising capital, looking for partners, and that's where we're at. We've kind of surfed through the past few years. I think we're coming into the year with lots of opportunities, and we're really focused on that.
That's it. Thanks a lot, Brian. It was a pleasure speaking with you, and congratulations on all your success. I know that you're doing a lot of things, and wish you the very best, especially in capital raising. I know
Yeah.
that's not an easy thing, and it takes a lot of time. So, all right. Thank you so much for your time,
Yeah,
Brian.
no,
Really
thank you. I
appreciate it.
appreciate you
Okay.
having me on.
All right. Take
Eye out
care.
for those.
Okay.
All right.
All right.
Thanks, man. Have a
Take
good
care.
one. Bye.
You too. Bye bye.